Now to our weekly segment, Best in Class. Today we look at a standout in fixed income investing. Ken Taubes is the head of fixed income at Pioneer Investments. He is also the fund manager for the Pioneer Strategic Income Fund, which is up more than 35% over the past year, which makes it into the 89th percentile, so doing very well. And he's joining us from Boston. Ken, good to talk with you.
Thank you, Betty. Good morning to you.
Okay, so in the fixed income space, we've been hearing a lot about corporate bonds. That's where you want to be. Is that where you want to be in 2010?
I think so. I think that if you look at the people you can lend money to, the various entities, government entities, corporate entities, or consumers, frankly, corporations continue to be in the best shape. They have the most cash on their balance sheet in years and years and years, and their credit quality continues to get better. Their productivity is high, their earnings are high, and their operating margins are high. Meanwhile, government debt continues to get worse in quality. U.S. government continues to borrow. Its credit quality is going down, and consumers who entered the recession in fairly tough shape are in a little better shape. But I think corporations are the standout people to lend money to in this economy.
And you want to be in where in corporations? I mean, I noticed in some of your holdings, you're in J.P. Morgan, Goldman Sachs, some of the financials.
Well, that's correct. We're in a range of corporate credit from high-yield debt to high-quality institutions that you just mentioned. Our general feeling in the banking industry, and particularly the large money center and super regional banks, that the credit losses that they've incurred are peaking, have peaked actually towards the end of last year. The interest rate environment is very favorable towards them. The capital markets are open for business, and I think they have delevered considerably and running their business more considerably. So somewhat counterintuitively, where the credit crisis started,
right,
I think the banks are fairly good shape at this point.
To actually go back to them. Ken, I was looking at your holdings, and from what my understanding, you do have some sovereign debt, right? Norwegian debt, France, Sweden. I mean, if you're going to be anywhere in the world, is that where you would want to be, or are there others that you're looking at?
We're looking at countries that have essentially pretty good economic activity. You mentioned Norway. If you look at our holdings, also Australian debt, Brazilian debt. These countries have very good economic activities. Their budget surpluses or trade surpluses. They have very good monetary policy and generally low debt to GDP ratios. I think in continental Europe, France is one of the better countries. Norway clearly is a standout. They've been raising rates, and they have the energy base that many of the other European countries don't have. And
does that mean then that you also don't believe that this Greek debt crisis is really going to spill over into the rest of continental Europe?
I don't think it's going to spill over in a big way in the near future, but I think it's those debt problems are real. They have overspent in a lot of these peripheral countries of Europe. You could say the same thing about the U.S. Budget deficits approaching double digits as a percentage of GDP, and it can't go on forever. It's not sustainable. So they're going to have to deal with the hard consequences of those budget deficits eventually. And for that reason, even though there seems to be a lessening in the current crisis, right, there's some dealing with it currently, but those debts haven't gone away.
Okay. All right, Ken. Good to talk with you about this. Ken Taubes, he's the head of fixed income at Pioneer Investments in our Best in Class segment.